Good morning, everybody. Hey, welcome to the last day of October. It's hard to believe that we're a third of the way through this last quarter of the year. I hope that your month has gone well. And hey, we'll talk about what's happening in the marketplace when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that, hey, in this world we live in, there are so many things that you and I we can't control. But you can take control of your portfolio. You just need to know how much risk you have in there. And you need to make sure that risk lines up with what it should be based on your current circumstances. Hey, give me a call, 863-382-0037.
It's 8:39 here, 21 now before 9. Time to check in on money and find out what's going on Wall Street. Neither Phillip, Statler, or I can figure out what the Sam Hill prompted Wall Street to go apey yesterday, but it looks like sanity is returning to the indexes this morning. Let's go downtown to Phillip and noodle it through together from Statler Financial Services. Phillip, good morning. How are you?
Hey, good morning, David. Doing well today. It is hard for me to believe this is the last day of October, to think that a third of the quarter's over, and hey, it's going to be New Year's Day before we know it.
Oh, geez, you had to say 23 days to Thanksgiving. How's that for
man.
short notice?
Yeah, geez.
Marty, first question I had when you picked up the phone this morning is I couldn't find it was, what the heck happened yesterday? Dow up 511 points, Standard & Poor's up 49, and that was enough to pull the Standard & Poor's index out of correction territory anyway. NASDAQ was up 146 points yesterday. I couldn't find anything that would have prompted it unless everybody just figured, by gosh, we sold the market down so far, there's bargains out there.
I mean, that's the only thing I can think of, is if we hit some barrier that said, okay, now's the time to buy computer wise, but because there's nothing has changed from an economic standard, looking at, going forward. I mean, I know the UAW strike looks like maybe they're finally winding that thing down. So yeah, but nothing I saw really spiked my point of, hey, yep, it's time to go there and buy stuff up. But
yeah, it didn't make any sense to me. I mean, basically everything was par normal. Yeah, it's good news. GM's got a tentative deal with the union, so the auto strike will be over, assuming the union says okay to that. We got the Fed meeting kicking off today. I've been making fun of the fact that the Federal Reserve decides to meet on Halloween, which just, I wonder what kind of masks they're wearing. The only thing I can think of that would cause this irrational exuberance is a story that came out on Yahoo, which kind of flies against the wisdom you and I have been maintaining. They're now saying that Wall Street analysts are now expecting the Federal Reserve to hold rates steady when they make their announcement tomorrow at a 22-year high, we might add. That kind of flies in the face of what we're expecting, given the way the economic news has been coming out. That's not generally enough out of Yahoo Finance to be able to drive the market up by 500 points, though. It just doesn't make sense to me.
no, it really doesn't. I know that we will still, I mean, it'd take a miracle today for the S&P 500 not to have its third straight negative month. I know it had a great day yesterday and bounced off its lows and got out of correction territory, but today's still the last day of the month, and a lot can happen today.
Yeah, but they ain't going to go up 5% in one day come heck or high water, are they?
No, sir.
Not normal. Data dump out of the federal government this morning. I got the employment cost index and the average wages over the last quarter, and this is again another reason why I'm kind of looking askance at that prediction that Yahoo Finance people were saying. The cost of employment for the average company in this nation last quarter up 1.1%. What that means is the average wage in the country last quarter up 1.2%. More of that good news for the worker, good news for the economy. We're earning more, but if you're a Federal Reserve officer and you're looking to control inflation, you're looking at that and saying, maybe we need a bump. Once again, the evidence looks in the direction of another interest rate bump being likely, doesn't it to you?
It does. I mean, just all the numbers we've seen come in give us that, and what Paulson said right his last speech it gave us reason to believe that they will raise interest rates tomorrow.
Yeah, the last rubber chicken speech out of Paulson, he said, no, there will not be a rate increase in December, but he said nothing about the October-November meeting. So I'm counting on another 0.25% tomorrow, but I'm kind of wondering, given the exuberance we saw in the market yesterday, if this little tidbit that I got on my tip sheet tends to indicate that maybe the rumor made it through the trading floor sometime before the end of the day.
I don't know. I was reading an article that said basically that there's still a split among economists as to whether or not there'll be an increase or won't be an increase. And it also talked about when you could expect interest rates to start to fall. They say typically once the Fed reaches its high for its whatever track it's on, it's 9 months before they start to reduce rates. Some people now think that it'll be sooner than that. And then there's obviously other people that think it's going to be longer than that because of his, verbiage of, extended high rates. And so we'll see.
Yeah, Paulson's been kind of making noise not to expect a rate decrease even through 2024 lately. So, and again, we're into different charted territory. Every time we've had an interest rate run up, whether it's to this degree or not, we haven't had it this kind of speed, to the best of my knowledge, ever at going up this fast. But, normally what happens is they overreact, they throw us into a recession, and then 9 months later when they figure out we've been in a recession, then they start reducing rates again. If we actually do get the soft landing they're talking about, we're kind of in uncharted territory, so I'm not sure that any of the historical indications really are going to apply anyway.
Yeah, exactly. So I'm just not sure. Nobody knows what way they're going to go. And I think I don't even know what the expectation is, right? Because half the people expect one thing, the other people expect something different. So it's a flip of the coin right now.
It gives us talking heads something for fodder anyway, doesn't it?
It does.
Speaking of talking heads, the heads of the companies that report on the exchange are in the middle of earnings season as well. And we're back. We're into household names again, among others, a big discount airline. How did JetBlue do last quarter anyway?
So JetBlue, disappointed, to say the least. They lost 39 cents a share. They were expected to lose money, but they're only expected to lose 25 cents a share. And revenue was just a tad below what was expected overall. And so they're down today 7.6% right now. So not a way to start off or to end the quarter for them, for sure.
Eventually, they'll go to charging for cushions on the seats. You'll have to sit on hard wood unless you want to pay extra.
That very well could be. They got to make money somehow.
Yeah, those extra fee airlines. I mean, you start out with a price that sounds really, really great, and by the time you get a seat, you're paying as much as the other airlines anyway.
Yeah, exactly. So, hey, we got some other household names. Pinterest reported they had stronger than expected third quarter results. They came in with earnings of 28 cents a share, which is really good for them. Their revenue 7.6 or 763 million. They saw a growth of 11% increase from a year ago in their revenue. Nice number for them. And monthly user growth was up 8% from a year ago. So they had some good numbers. Wish you had maybe had it a couple of days ago, but it's up 15% this morning.
That's a good start and a heck of a nice bump up.
Yeah, exactly.
Especially against a relatively flat market this morning. That's good to hear.
Yeah, it is. And then your favorite of all, Chewy reported.
Good.
Yeah. So they traded up this morning. Maybe they didn't report. They got upgraded by Morgan Stanley. So, that's all it takes is a little bit of an upgrade. They've been able to,
given the increase in the price of pet food, I thought that'd probably be challenging times for companies like Chewy that specialize in that.
They're up 4.4% this morning.
Take that happily. Any other household names?
Oh yeah. Anheuser-Busch. They reported they beat by 3 cents a share, came in at 86 cents. Revenue was about 200 million less than expected at $15.5 billion. They're still trading up this morning 4%. A big name, Caterpillar.
Yeah.
Yeah,
Big machines too.
That's right. Big machines. Fourth quarter revenue missed expectations. I saw their earnings were up, came in at $5.52 versus $4.75 expected. So they, at least they beat on the earnings number, but that's not helping them this morning. They're down 4 3/4% this morning.
It's interesting. Some of them they're holding to earnings, some of them they're holding to revenue, and it kind of depends upon the company whether or not the traders hold them to one, the other, or both. Right?
It definitely seems that way.
Yeah. No pattern. No pattern this season.
Yeah, no pattern at all when we look at things like that. So, but hey, that's we'll give you one more and kind of close out with VF Corporation. They're the apparel and footwear company. They reduced their full year guidance. As a matter of fact, they took it all the way off the shelf and we're going to regroup. And so they expect one of their brands is the Vans shoes. They expect it to not do very well this upcoming quarter. And they're trading down this morning 7.3%.
I had to have one blotch on an otherwise pretty starry picture this morning. Resetting the table, yesterday was a big up day, and the only reason we can think of is, well, okay, fine, they got a contact high off the potheads across the street in Central Park because there wasn't really a reason. 45 minutes early this morning, how are we doing on the futures market, Phillip?
Dave, it's green, but I'm going to tell you, it's barely green. I mean, like the Dow Jones is less than 0.1%. The S&P 500 is up 0.14, and the NASDAQ 100 is basically flat right now. So everything's green, but just barely green. So we'll see what happens at the open. On the other side of the coin, we got silver down 0.7%. Gold is flat right now, but yesterday it must have really had a great day. It was up to $2,006.25 an ounce right now. So back over 2,000 finally. And then crude oil's down, down from last time you and I spoke, but up from the close, up 0.6 to $82.81. At least it's getting closer to 80, Dave.
Yeah, it's getting there. It was in the upper 82 range yesterday morning at this time as well, so I'll call it flat day over day. Overseas markets are kind of interesting. Normally the Asian rim markets will follow our fortunes. Evidently the traders over there said, I don't know why they're doing what they're doing, and for the most part the Asian rim markets all closed off at 6 a.m. this morning. European markets are cautiously optimistic. Most of them are up, but fractionally halfway through their day. Keeping tabs on all this and figuring out where the possibilities are to make a retirement happen the way you planned it to be sometimes takes a spare pair of eyes with some expertise. How do I get a hold of you to rent your eyes on that?
Absolutely, Dave. We do our core retirement analysis. Give us a call at 863-382-0037 to schedule your core retirement review. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning, same time on Light FM. Phillip, thank you so much, and I'll see you then, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week is going well. Hey, look forward to November. It's coming up real quick. Talk to you again tomorrow. Bye now.